Yes, you're on data, and I'll be like, okay, fine. Try to be in a Wi-Fi zone as soon as possible. All these things, if you learn them live, it's the best. Recordings are there for you for your convenience, but if you learn them live, that's the best way to learn. All right, let's get started now. Hi everyone, it's the first time I'm seeing you and I'm meeting you guys live. Okay, and I believe you've got all the recordings, all three recordings of the prerequisite sessions. Okay, and in that we have discussed Eastern patterns, we have discussed Western patterns, we have discussed the tool training as well. We discussed about the volumes, we discussed about price pattern, volume, momentum, volatility, and all that stuff. Correct? So are you guys fully aware of what we have done in the pre-recorded sessions? Yes or no? Have you guys watched all of them? या फिर it was like कि नहीं चलो ठीक है आ गया recording, doesn't matter. Okay, and I want this class to be very interactive. Okay, uh, I want you guys to reply as quickly as I ask the question. Okay, as quickly as possible. So yeah, please, I would. All right. Yes, yes. Have you guys watched the recorded sessions? Yes or no? Everyone? Hi, Shreyas. Nope. Oh my God. If you haven't, then how will you understand what we're going to do today? Of course, there will be the hints of explanation, but I have explained everything in detail there. Okay. And if you watch that, that's going like that would have made this session very, very easy for you. At least a little bit convenient, not easy, but convenient for you. Hi, Tejal. All right. So, yeah, I'll just introduce myself one more time, everyone. My name is Ansh R. Hiran. I am a technical analyst, trader, co-founder of Financial Gateways, stock market coach, and mentor. I say that I have learned stock market from some of the best coaches in the world, and now I'm teaching this art of trading to thousands of students around the world via conducting different, boot camps and running different courses on different platforms with different institutions. I'm also associated with some well-known brokers of the country, creating educational content for them as well. So this is what I've done and what we've been doing so far. I have my own stock market academy, and I'm also associated with Eddie Globe since a very long time now. Okay, and this entire swing trading boot camp is conducted by Eddie Globe to make you guys aware of how swing trading can actually change your trading game, and how by following a systematic approach towards trading you can actually create a consistent return from stock market. Some people use consistent income, but that's a wrong word. Okay, you can't generate a consistent income, but you can generate a consistent return for sure from stock market. So as we've already discussed, this program is going to be in like three different parts. First part was your pre-recorded sessions that you got, that you might have got so far, the three pre-recorded sessions. Okay, and then there are going to be two live sessions, one today and one tomorrow. Okay, in and all those pre-recorded sessions, they were like the prerequisite knowledge that you need in order to understand the strategy part. If all those things are clear, all the basics are clear to you, all the basic structure of technical analysis is clear to you, then we can move forward with the strategy. One and these two live sessions are going to be like your strategy learning part, where you will be learning how what strategies I use, how I trade in the market, how I find out stocks in the market, and how I actually use those strategies in the market. So what are the rules of the strategy, when to buy, when to sell, what to buy, what to sell. So we're going to be covering that part today and tomorrow. We'll be covering different strategies in which, I always say you should have a basket of strategies, so that market is not the same all the time. Sometimes the market is volatile, sometimes the market is trendy, sometimes the market is sideways. So you should have at least a pair of strategy, a set of strategy, which can help you to make money in all these different types of market. So this is what we are going to learn in these 2 days. Okay. And once we are done with the strategy, once you're done with the strategy, you will get one more video. Okay, one more video, recorded video, in which we will be talking about risk management, which is the most powerful part, the most important part of this entire bootcamp. It doesn't matter which strategy you're using, it doesn't matter what setup you are using, who is your teacher. If you don't crack the risk management part, you can never ever make money in the stock market. Never. Okay. I have a small story, like not very big, but yeah. Like a few years, like it's been like 8 9 months, few months ago, in a similar kind of boot camp with some other company, uh, and that was an option trading boot camp. So I got a student, and he learned option trading from a very popular YouTuber, uh, and he followed this strategy, and he's a very famous YouTuber, and very powerful strategy he taught. And he used this strategy to convert his 2 lakh rupees to 80 lakh rupees, 2 to 80 in 6 months. And he showed me his P&L, and I was super impressed. And then he showed me the P&L of the next 1 month, the 7th month, and he said, from 2 lakh, I went to 80 lakhs. And from 80 lakh, I went to zero in just 1 month. Why? Because my risk management was poor, and I was very, very overconfident. So even if you have the best strategy in the world, which works 90% of the time, there's no such strategy. But if it works 90% of the time, let's assume, when it will give you those 10% of times, it will take away all your capital. So that's why risk management is very, very, very important. So once we are done with these strategies part, I'll be giving you a video of mine, just like this. Okay. And you will you will sorry, what was I saying? Okay, sorry, I got distracted from your question. Okay. And you will watch that video. Once you have watched the video, once I've got the confirmation from everyone that okay, they have watched the video, we will be doing a live analysis session where you and me, we all will be together like this again. And I will be selecting stock using the same strategies. I will be analyzing the market, I will be selecting the stocks, okay, using the same strategies, same setups, and we will be, in a way, it's like the preparation for the next week for swing trades. This is what we are going to do. This is how the entire program is going to go. How effective, like Pussat 2, I don't know, I'm really sorry if I'm pronouncing your name wrong. How effective this can this strategy be for a person in a long run? This strategy means I haven't taught any strategy yet. Uh, but all these strategies, the group of strategies that I'm going to share with you, if you follow them with proper risk management, they can definitely generate a good amount of wealth, a consistent wealth in the long run, for sure. All right. So are we all on the same page about the course, everyone? Are we all on the same page? Yes. You guys have the option to send me the emojis. So whenever I have a question and you have to answer yes, then just give me a thumbs up. You will get an answer option of getting thumbs up in the emoji part, right? Thumbs up, yes, Tejal. Great, perfect. What about you, Sarah, Ganesh, Shreyas, Pusatuo? Yes, okay, perfect. KS, great. Everyone, give me a thumbs up quickly. Yes. Okay, great. All right. Ganesh, what about you? Sarah? Yes. Okay. All right. So let's get started with this first strategy based session today. All right. I'll just start sharing my screen and we will be good to go. All right. So I hope you guys can see the screen. All right. Now, pay attention, everyone. This is session number 4. Okay, I want your 100% attention. If you are doing some work, if you're traveling, if you are, having some snacks with you and watching a TV and, having another slide open, close all of that, stop all of that. This is a very, very serious session, okay, about the strategy part, which is very, very important. And I think most of you might have paid for the session, these two sessions only particularly. Okay, so, okay, let's get started. Strategy number one, everyone. Okay, let's start. These are the three things that we are going to use. These are the three tools that we're going to use in this strategy. This is our momentum based strategy. Okay, you will, and you should have a notebook and a pen with you. Okay, first strategy is momentum based swing trading strategy. Momentum based swing trading strategy. For this strategy, you are going to need three tools. Okay, what are those three tools? First is relative strength index, that is RSI. We talked about this thing in our tool training. We talked about this a lot actually. We talked about RSI, 60-40 crossover. We talked about range shifts. We talked about 60-40 support resistances. We talked about uh, divergences. So we had a great discussion about RSI in our tool training. So these are the three tools that we are going to use. First is RSI. Second is 200 exponential moving average. Okay, we talked about moving averages as well. What are moving averages, how they work, and which are the most powerful ones. So 200 exponential moving averages is something that we're going to use. And the third thing that we're going to use is, of course, price pattern and volume. So this is the third thing that we are going to use for this strategy. Now, these are the tools that we will be requiring. Prerequisite knowledge that you need in order to understand the strategy is unconventional use of RSI. Now, if you have watched the recordings, you know there are two uses of RSI. How many of you have watched the recordings? Tell me firstly. How many of you have actually watched the recordings, all the recordings, all three recordings so far? I know KS haven't watched the recordings, but about you, Ganesh, Tejal, Shreyas, Pusatuo, what about you guys, Sarah? Have you watched the recordings? Tell me. Yes or no? Anything is fine. Just tell me. Have you watched the recording? Okay, 50%. Okay, then we might not be knowing the unconventional use. Okay. What about you, Sarah? What about you, Shreyas? What about you, Tejal? Ganesh? Have you watched the recordings? No? Okay. My God. This is going to be a tough session. 1 hour, 20 minutes. That was the second session, I guess. First or second? Second, actually. Second is. No, maybe it was the first. I don't remember. Till half on second session or bapre. Okay. All right. So you guys have not watched the recordings yet. Fine, but I would suggest okay, before, like, okay, of course you will have the recordings of all these sessions. So you will have the access of all these sessions for a long time. Uh, so I would suggest go through the sequence, go through the process. Okay, watch the recordings first, then watch these recordings as well, and then try to understand what I'm trying to say. So you should know the unconventional use of RSI. Okay, okay. Then you should know multiple time frame analysis. Then you should know about moving averages. You should know about basics of price action. You should know about volume analysis. Now, as of now, we have talked about basis of price action. We have talked about moving averages, unconventional use of RSI, volume analysis, and all that stuff. Multiple time frame is still pending. Okay, so let's talk about that first. Or let's start with the RSI. Okay, what is RSI? RSI is basically the speedometer of the market or the momentum indicator of the market. Okay. There are two uses of RSI. First one is conventional use that says, okay, if the RSI, it looks something like this. RSI is a tool which looks something like this. Okay. It is an oscillator. Like oscillator means it just keeps on moving up and down within a range. It oscillates. Okay. So it has two bands. First is upper band, second is lower band. Nowadays, they have introduced the middle band as well, but conventionally, it was two bands of indicator only. Okay. Now, what they say in conventional study, they say if the RSI is going above 70, okay, that means market is overbought and the market will go down. Overbought means so many people have bought beyond their capacity, they can't hold the market anymore, it will go down. And if the market, if the RSI of the market is below 30, below 30 level, that means the RSI or the market is oversold. Okay. And they will start, people will start buying again and the market will come up. And this is a very, very wrong approach. You will see in the market, this approach does not work. Okay. That's why we have another approach of understanding the RSI, which is unconventional use of RSI. What is that? We just change the levels from 70-30 to 60-40. We just narrow down the range from 70-30 to 60-40. Now this becomes our unconventional RSI. Okay. And this says whenever the RSI of any stock or market goes above 60, that means the market is or the stock is in bullish momentum. That means momentum means what? Speed. Matlab market is going up and going up with a great speed. Okay. If the market, if the RSI of a particular stock is below 40, that means the market has a bearish momentum. That means market is going down or the stock is going down and going down with a great speed. And when the RSI line is between 60-40, that means market is sideways. That is unconventional use which we are going to use in this market. Okay, so above 60 bullish, below 40 bearish, between 60-40 sideways. These are the golden rules of RSI. Okay, these are the golden rules of RSI. Note them down. Now, if this concept is clear, let's talk about another thing, which is called multiple time frame analysis. Okay, multiple time frame analysis. Now, what is this? As the word suggests, it is multi-time frame analysis. That means you are analyzing the market on multiple time frames. Let's say you are watching Reliance stock. You're looking at Reliance stock. You're not just looking at Reliance chart on a daily basis. Like you're not just looking at a daily chart of Reliance. You are looking at multiple time frame. That means you're looking at monthly time frame of Reliance as well. You're looking at weekly time frame, and then you're looking at small time frame, which is daily time frame as well. Sometimes you go even more smaller, even more shorter time frame, which is hourly. Okay, and based on these multiple time frames, you make a decision that okay, whether you should buy or sell or not. Now you might be wondering, why are we looking at these multiple time frames? Right? See, now you guys might be aware of this, and we talked about this in the pre-recorded sessions as well, that the data which a candlestick represents, whether it's a 5-minute data or 15-minute data or a 1-day data, it is the same data, just the difference of time frames. If you club 15-minute, 4 15-minute candle, it will make a 1 hour candle. If you club 6 1-hour candle, it will make 1-day candle. The data is same. It is just either expanded, zoomed in, or zoomed out. Correct. So if you see a zoomed out view of the market, for example, if you want to see how a city looks like, what is the best way? Should you like stay on the road on a busy street, or you should take a helicopter and so that you can see the entire city from the top. What is the best way? If you want to see the overall look of the city, if you want to see how the city actually looks like, what is the current position of the city, what are the current dimensions of the city, what is the best way? The best way is to look from a helicopter. Go at a great height and watch the city from a helicopter so you can see, okay, this is the entire city. Then if you want to see some streets, it is better to use see this from from a mountain maybe, or maybe on a tall building. Just go on top floor and you can see, okay, this is the street, that's the one, that's another building, that's another building. You can't see that from the helicopter because that's too much high. Because that time you will just see a piece of land with so many buildings. You can't see the streets and the buildings properly. And then if you want to go to a particular destination, or if you want to walk, or if you want to explore the street, what will you do? You will walk on the roads. So what are you doing? Don't you think this is a multi-dimensional analysis? You're looking at a bigger picture, then you're looking at a medium-sized picture, and then you are, you know, making your decision on a very small scale. If you want to buy a candy from a particular store, you can't travel to that store with helicopter. You will need to walk on the street and you will need to go to that store to buy that candy. Similarly, if you want to follow the market, if you want to go in the direction of the market, you have to follow the overall trend of the market. Okay, you have to follow the overall trend of the market. And to see the overall trend of the market, you will need multiple time frame analysis. In this analysis, we look at multiple time frame. First one is bigger, second one might be medium one, third one might be even smaller. Okay, people usually go with 2 time frames. Sometimes they go with 3. Sometimes, I don't know, some crazy people, they also go with 4. But we are going to stick with 3 and 2. The third time frame will be the biggest one. Okay. In the biggest time frame, we are going to see what is the overall trend of the market, overall trend of the stock. That means if the stock is overall strong or not. Is this overall a bullish stock or not? Because in a bullish stock, okay, in a overall bullish stock, if you buy that stock, sooner or later it will go up because the overall structure is very bullish. In the medium term, there might be some war going on, there might be some election results going on that is impacting the market. So whether the market is strong in the medium, in the current market situation or not, that can be seen with one smaller time frame. And the execution part, that means your working part, will be done on even smaller time frame, which is going to be a third time frame in this particular strategy. Okay, that's why we look at multiple time. How to do that? We can talk about that. Don't worry. But just relax. Okay, so required condition of buying setup. Required condition of buying setup. Our required condition of buying is your monthly RSI should be greater than 60. And your weekly RSI should be greater than 60. What do I mean by that? What is the meaning of RSI greater than 60? RSI greater than 60 means the stock or the market is bullish, right? So I am looking at 3 different time frames. First one is monthly, second one is weekly, third one is daily. Monthly is my overall market, weekly is my medium term market, and daily is my execution part where I'm actually taking the trade. Okay. If the monthly is above 60, that means the overall market structure is bullish and it's in bullish momentum. If the weekly is above 60, that means in the medium term trend also, the trend is bullish and bullish positive. Bullish and momentum is also bullish. Okay, so these are the 2 conditions which I need to fulfill before taking a trade. That my monthly RSI is above 60, weekly RSI is above 60. Once these 2 conditions are fulfilled, okay, then I will look at my rules of entry. What are my rules of entry? Let's talk about that. First rule of entry, 1 day green candle that makes the daily RSI cross the 60 level will serve as the alert candle. Okay, one day green candle that makes the daily RSI cross the 60 level will serve as the alert candle. What do I mean by that? This is the RSI. I'll just show you. This is your 60 level. This is your 40 level. Okay, we are confirmed that okay, monthly RSI is about 60, weekly RSI is about 60. Fine. Now, one day green candle that makes the daily RSI, daily means one day RSI, cross the 60 level will serve as the reference. This is the RSI going on between 60 and 40. And the market is also going on the top like this. Let's say there is a big green candle, market has gained a momentum, bullish momentum on daily chart. What will happen after that is because of this green candle, the RSI of the daily chart will also cross 16. So the green candle that makes the daily RSI cross the 60 level will serve as your alert candle. It means this green candle is your alert candle. This is giving you alert to buy or sell. It's just the alert. It is not a confirmation. You're not buying on this candle. This is just your alert candle. Okay, this has happened. Now I can think about buying this stock. The volume of the alert candle should be higher than 20 moving averages. Second condition, the volume of the alert candle. Remember, price, pattern, volume, momentum, volatility, time, sentiment, and trend. So price is confirmed. Okay, we talk about price and pattern, but the volume should be confirming. If the market is giving a breakout, the volume of the breakout should be very, very strong. So the volume of the alert candle should be higher than 20 moving average. And what is this 20 moving average? I'm going to explain that to you in the live chart only. Don't worry. Buy the stock when the next daily candle cross the high of the alert candle of the underlying stock. What is the alert candle? This is the alert candle. You have to buy this stock when the next candle which is forming, the next daily candle which is forming, it crosses the high of this alert. If the high of this alert candle is crossed, you by the next candle like this, you will buy this stock and the market will go. Are the rules clear, everyone? Tell me. Rules clear, everyone? Sarah, KS, okay, yes. Pusatuo, Shreyas, Ganesh, Zeno. Okay. Ganesh, Shreyas, what about you? Yes. Okay. 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 All right. These are your buying rules. Okay. We're going to talk about that in the later session. How to, like, we're going to talk about all these different parts, stop loss, concept two, and all that in the later session. Okay. Now look at this carefully. What is happening over here? Pay attention. On my screen, I have three charts at the same time. Okay. Now, if you are a beginner, this might be a little bit scary for you, but don't worry. मैं हूं यहाँ पे, I will explain everything. Okay, don't worry. Look at this. These are three different time frames of the same stock called Tata Motors. Okay, this is a 1 month chart. It means monthly time frame. That means each and every candle is showing you data of 1 month. This is a weekly chart. Center one is the weekly chart. So that means each and every candle is showing you data of 1 week. Okay. And this is your daily chart. That means each and every candle is showing data of 1 day. Simple. I have plotted this chart. How to make this setup, how you can see multiple charts, everything I'm going to tell you. Don't worry. Just focus on the concept right now. Okay. Now look at this. What was our condition? Our condition was the monthly RSI should be greater than 60. This is our RSI. Can you see unconventional RSI? 60 level and 40 level RSI, right? Monthly RSI should be greater than 60. Of course, it's greater than 60. One condition checked. What was the second condition? Weekly RSI should be greater than 60. Right now it is above 60. Second condition checked. Third condition was no, there was a third condition. Third thing was whenever a green candle, whenever a green candle takes the RSI, daily RSI above 60, that will be your alert candle. So this green candle, can you see over here? I'm really sorry for my mouse. This green candle is taking RSI above 60. Yes, over here. Okay. What was the second condition? Second thing, volume of the alert candle should be higher than 20 moving average. Can you see this volume over here? And along with the volume, can you see this blue line which is going on? This is a moving average line of volume. How to plot this, I'm going to tell you, don't worry. But yeah, this is like the average volume line, 20 moving average volume line. So the volume of your alert candle, which is this one, should be higher than 20 moving average. And of course, can you see this? This volume is much, much higher than the line, which is 20 moving average line over here. Perfect. Condition satisfied. You will buy above the high of this candle. Next day, the market opened gap up and the market went all the way from 460 level to 500 and almost 30 level. You can calculate the return. समझ में आया everyone? Are you understanding the concept? Yes. Example say, is it better now? Sarah, KS, Posato, Posato. What is your name? Can you just unmute and tell me? Otherwise, it's gonna how to pronounce your name? It's sounding fine. Okay. Posato. Okay. All right. So clear, everyone. Sarah, KS, Posato. Yes, Ganesh. Okay, got it. Zeno got it. Shreyas, what about you? Yes. If not, I'm going to show you more and more examples. Don't worry. Okay. Let's see. Just give me 1 second. Yeah. Let's see one more example. Look at this. Same stock, Tata Motors. What were the three conditions? Tell me. Monthly RSI should be greater than 60. Perfect. Got it. Weekly RSI should be greater than 60. Perfect. Got it. This is above 60. Right? And no, this is already done, right? Okay, fine. Let's see on it. This one. Again, Tata Motors. Oh my God. Monthly RSI above 60. Yes, above 60. Perfect. Weekly RSI should be above 60. Is it above 60? Yes. And daily RSI should give a crossover. Just give me 1 second. Crossover means the RSI should be crossing 60 level. At what candle the RSI is crossing 60 level? This one. This candle, sorry. Okay, this candle is taking RSI above 60. Okay, this candle is taking RSI above 60. So this is your alert candle. Okay, this is taking RSI above 60. Perfect, no issues. Even this one is a great example. I'll explain that as well. But right now, just look at this. Where will you buy? You will buy above the high. Firstly, you will see the volume, whether the volume is about 20 moving average or not. So you can see over here, uh, the volume is much about 20 moving average. Great. Then you buy above the high of the alert candle. The high was crossed the next day and the market went straight up from 740 to 810. You can calculate the return for yourself. That is till I like took the screenshot. It might have gone up even more higher. This example is also there. Here also RSI was going above 60. Okay. On this candle, this was an alert candle, correct? You buy above the high of this, the volume is above 20 moving average. Great. You buy above the high of this, the market, the order is executed. For a few days, it was sideways, and then boom, you get all your targets. So is the entry part clear to everyone? Entry part, because now we are going to move towards the stop loss and targets and all that as well. So is the entry part clear to everyone? And I need answers from you. Why everybody is not answering? Yes. Okay. Entry part clear. Case for case is clear. For Shreyas is Ganesh is clear. All right. Okay. If the entry part is clear, let's move on to volume. Okay. We talked about the volume. We talked about the buy the stock. Okay, fine. Now there is one more concept. Understand that first, and then we'll be talking about stop loss and target as well. RSI level also act as strong support and resistances. Okay, RSI levels also act as strong support and resistance. That means these 60. Let's change the color. This 60 level and this 40 level, they act as a very strong support and resistance. If you have watched the recordings in, and I know you haven't, but we have practiced this thing in those recordings. These levels also act as strong support resistance. That means if the RSI is above 60, okay, and of course the market is also going up. If the market goes a little bit down, the RSI will also go down. It will take support on 60, and from this level onward, when the RSI is taking support on 60, it has the potential to take the market up, take the support on 60 level, and has the potential to take the market up from this level. And let me tell you one thing. This is very important. Okay, note this down. Buying on support is always better than buying on breakup. Okay, buying on support is always better than buying on breakup. Why am I saying this? I'll tell you. So RSI level also act as strong support and resistance. So that can be the example of 60. For example, if you're taking short trade, so let's say RSI is below 40, you're shorted the market. So market will also be going down because RSI is below 40, going down with a great speed. What will happen is market might go up for a small time. That will take the RSI a little bit up. But because there is a 40 level, that will act as a resistance for the market, and market might take a resistance on 40 level and take the price even more down after this. Okay, I'll show you some examples, don't worry. So instead of buying on the breakouts and crossovers, we can also look for buying opportunities at 60 support or 40 resistance. What do I mean by that? Let's talk about this. See, in case you missed this, there was a huge gap up, right? Okay. So what happens is when we are trading a breakout, let's say this is a level and the market is giving a breakout. Our usual stop loss is the low of breakout candle. We buy above the high and the low of breakout is our stop loss. And if the stop loss, if the breakout is very powerful, it is very strong, what will happen is this breakout candle will be very, very big. And if that is the case, if that is the case, then what will happen is your stop loss will be very, very big. And if that is not fitting in your risk reward ratio, it is better you avoid this trade. You avoid the breakout trade. Or sometimes it happens like this also. Look at this. You were supposed to enter here at 440 level. That would have made your stop loss small because the stop loss would be, let's say, 430. 10 points stop loss, 2.5% of stop loss in this stock. But now, because you have to buy at least at this level, which is 450, now your stop loss is 5%, which is very big against your target. So this particular trade would be like a missed trade for you. Then what will you do? You will wait for a dip. You will wait for a support. Why? Because you might have heard this thing called buy on dip. Whenever the market takes a dip, you buy. Then it goes up. Then whenever it takes a dip, you buy. It goes up. Whenever it takes a dip, you buy and it goes up. So buying on dip is one of the most powerful strategies that you can learn in the market. And how can you actually execute that? By using this simple concept of RSI. How? Look at this market. And by the way, RSI works on closing basis. I have mentioned this in the recorded sessions, but since you guys have, I don't know how many times I will mention this. Because you guys have not watched the recordings, because you guys have not watched the recordings. But yeah, you should have. You should have watched. That would have made this journey very, very smooth. Uh, anyways, so RSI work on the closing basis. So if there is a red candle like this, if there is a red candle, two red candles, this will take the RSI down. If there is a green candle like this, it will take the RSI up. Okay. If the closing is lower than the previous opening, if the closing is lower than the previous closing, it will be downward going RSI. If today's closing is higher than previous day's closing, it will be upward going RSI. Okay. So what happened is RSI was above 60, that means market is strongly bullish. All the conditions were satisfied. You missed this trade, or because maybe you do not miss the trade, you missed this trade purposely because it was not fitting in your risk reward ratio. You got another opportunity. When the market came down to take a support here, there were two red candles that took the RSI on 60 level here. So when the support was confirmed, now how to know when the support is confirmed? There are, oh my God. So I've mentioned that as well in the videos. Uh, so there are three ways you confirm the support. Okay, how to confirm the support? So, but promise me after explaining this also, you will watch the recordings. Okay, above 60, it has come down. That means there must be few red candles. So the candle which has taken the RSI to 60 level, the latest candle which has taken the RSI almost to 60 level. Okay, that will be your alert candle. So if the next candle which is forming, it has crossed the high. It has crossed the high of this candle, this red candle. You will buy above the high of this candle. Why? Because we do not trade on anticipation. We always trade on confirmation. So we have to confirm the support. How will we confirm the support? If the high is broken, that means it's a positive candle only. Right? The market is taking support and the RSI will also turn up. That means we can buy above the high of this candle. If that is not happening, then another case can be you can see some Eastern patterns over here. Okay, Eastern patterns like doji, hammer, right? Patterns like these, or tweezer bottom or something like this, which can alert ki, okay, the market's taking support and RSI is also consolidating over here. And if the high of these pattern is broken by the next green candle, you can buy and the market can go up. And the third way, the RSI can take support, or the market can take support. Uh, is these are the red candles which are taking RSI to the for 60 support level. The third is you don't know about any Eastern pattern, but let's say there is a green candle which has formed. Now, if it would have crossed the high of the red candle, I would have bought this immediately. But because it has not crossed, my my buying order on this particular day is not activated. Okay, but now because it has made a green candle, that means what? The RSI is already turned up. That means the support has already been confirmed. Okay, what does that mean? That simply means support is confirmed. So now you don't have to wait for the price to cross this high. You can buy immediately after the cross of this high, the high of this candle, and you can buy above this. The moment the high of the support candle is broken, you can buy and the market can go. So in this scenario, what is happening? What is happening? There were a few red candles that are taking RSI to the 60 level. On the next day, when it was supposed to take the support, it actually took the support and crossed the high of the red candle. So you will buy immediately above the high of the red candle. And after that, you know what happened. It went straight up. Now understand this. If you would have taken a trade over here, okay, your loss would be this much. Stop loss would be this much. But now because you've taken the trade here at this particular level, this is your buying level, what is your stop loss? It is here, the low of the swing, which is very, very smaller than your previous stop loss. So you have reduced your risk as well when you are actually buying at a support. That's why buying at support is always better than buying at breakouts. Okay, buying at support is always much, much better than buying at breakouts. Is this thing making sense to everyone? Yes. Yeah, okay, I got yeah. That's great. That means it is making a little bit sense. Okay, perfect. But promise me because okay. Dipti, please mute yourself. Uh, anyways, so yeah, but yeah, because I'm explaining everything, okay, that doesn't mean you don't watch the record because on those recordings I have talked about everything in detail. And you know, the only way to be in the top 5%, top 10% is to learn everything in detail. Okay, I'll show you some more example. Look at this. That was your support trade, 60 support, and boom. Okay, another 60 support at this level. Now again, market can take 60 support like exactly on this point. RSI can take support like this because imperfect is like also imperfection is also property of market, and then it can be like this as well. So market is not going to show you picture perfect scenario all the time, but little bit here and there is fine. Okay, you have to understand कि okay चलो market है, price है, अपने हिसाब से चलता है. Can we also spot it? No, we'll talk about it. Don't worry. अभी इसका नहीं, अभी जितना मैं बता रहा हूँ, I'll tell you every detail. Okay, don't. Okay, look at this. It came down again by these three red candles. Okay, near RSI यहाँ पे आया. You're ready to buy. कभी भी reversal हो सकता है. You're ready to buy. Okay. So अभी जब next day when the candle is forming, you're hoping कि support ले ले. What will happen? You will place your buy orders above the high of the red candle. And what happened? It actually took the support. It broke the high. Your buying order was executed, and the market went a little bit down. Tested your stop loss, but ठीक है, stop loss के नीचे था, नहीं hit नहीं हुआ, and then it went straight up. In case you miss the support, you could have entered on this support as well, and the market goes straight up. Stop loss is very, very small. Targets are very, very big. Look at this, some more examples. In case you miss this trade, which is a 60 crossover trade. Now, when I'm showing you this particular chart over here, don't miss these two. Don't do that. Okay, look at this. RSI above 60 confirm hai ki nahi? Week monthly basis pe. Weekly ke upar is it confirmed or not? If it is yes, if it is confirming, then only you have to take the trade. Otherwise, don't. First two conditions are still intact. So in case you miss this trade of this breakout, okay, which is buy above the high of this breakout candle, which is taking the RSI above 60 over here, and the low was this, which is your stop loss. In case you missed it, what will you do? What will you do? You will wait for the market to take a support. Kab was support? When there were a few red candles like these, okay, which took the RSI to 60 level. Whenever the high of this red candle was broken, you bought with a very small stop loss, and the market went straight up. Right? Breakout. This is the breakout candle with good volume. Yes. Okay. Now it never took a support on 60. It went down over here. Okay. So there is no point of looking at it. Fine. When did it take the support? Now this will again be a crossover. See, it went below 60. Then it is going up again. So this is again a crossover breakout, right? So above the high of this, below the low of this, you buy above the high, it goes up. After a few days, it comes down and takes the support on RSI. You can buy. Oh, now look at this. Another example that I wanted to show you. Look at this. This is the red candle which is taking the RSI down to 60 levels. Okay. Now, on this day, you were hoping it will cross the high and your trade will be executed. But on this day, it did not cross the high. Your trade was not executed. So next day, you will not wait for कि red का high cross हो तब मैं buy करूँगा. नहीं. The next day, when the high of this green candle is crossed, because the RSI has already taken a turn like this, you will buy and the market starts going. Now it is looking very small movement, but it's a movement from 840 to 885. That means 40 points movement, 5% का move है. Okay? छोटा नहीं है, बड़ा move. Because the candles are looking small, don't get confused. 5% in a few days, you get 6 to 7% in a year in FD. So 5% in a few days is a great return. Okay, don't fall for the size of the candles. So is the second concept also clear to everyone? कि कब enter करना है, कब नहीं करना है? How to take entry on the support? Yes, Ganesh, Shara, case. Wow, now I'm getting responses. Good, good, good. जब तक लोगों को पैसा नहीं दिखाते तब तक they don't respond. Yes. What about you? Shreyas, Posatuo, what about you? Is it clear? All two concepts of entry? Great. Now I got 100% response. Perfect. Now, if that is clear, your entry is clear, let's talk about the risk, because whether you will make money or not is just a minute. Okay, whether you make money or not in the stock market is just a question of how well do you manage your risk, how well do you manage your losses. Okay, so let's do that as well. First stop loss will be the low of alert candle. Your initial stop loss that we call as initial stop loss will be the low of alert candle. What is your alert candle? The candle which is taking RSI above 60. So that alert candle low will be your stop loss, and you buy above the high. Usually, I'm showing it by red color, but it should be green candle. Wait. Okay, you buy above the high of the green candle. Your low of the green candle will be your initial stop loss. Once the price starts moving in the desired direction, stop loss can be trailed. Your stop loss can be trailed. What is the meaning of trail? I'll tell you. First target, what will be your target? First target will be stop loss into 1.5, where 50% position can be booked. What do I mean by that? Let's say the stop loss is 10 points. Okay, whatever the stock you're looking at, the stop loss is 10 points. What will be your first target? Your first target will be 15 points. Why? Because 10 into 1.5 is 15. So once you have reached the 15 points benchmark, you will book 50% positions over there. What does that mean? Let's say you have bought 100 quantities. Okay, you have bought 100 quantities of a particular stock and you have taken 10 rupees of risk on one share. Once you start getting 15 rupees of profit against 10 rupees of risk, you will book 50%. You will book 50, you will sell 50 shares on that 15 rupees of profit. Remaining positions can be booked by using trailing stop loss. Now, see, the thing is, you have to keep your loss in your hand. What do I mean by that? You have to book your losses at a decided level. Let's say it is a 10 rupees loss. So if I'm wrong, market will only give me the loss of 10 rupees. The market cannot give me loss higher than this. But if I'm right, how much I can be right? That is, that's an infinite possibility. Why? 100 rupees stock can go up to 200, can go up to 1000, can go up to 8000, can go to 10,000. Who am I to decide how long it will go up? I am not deciding that. But I am deciding that if I am proved wrong by the market, I will only lose 10 rupees. So what am I doing? I am booking half of my quantity at 1 is to 1.5. That means over here, 15 rupees of profit. And then I am trailing the rest of my quantity till as high as it can go. How to do that, I'm going to teach you, don't worry. But as high as it can go. So that I can capture the maximum amount in this overall trend of the market. So that maybe profits will be bigger and losses will be smaller. Making sense? Making sense, everyone? Yes. All right. So remaining position can be booked by using trailing stop loss. There are some other ways to decide the target as well. Okay. Let's talk about that. Enough of theoretical gyan. Let's see how it actually works. Okay. Let's see how it actually works. We know about this. Okay. Let's look at this example. Uh, Breakout candle is this, right? Alert candle is this. You buy above the high. This is your stop loss. Whatever is distance, let's say it's 650 to 680. That means not even 650. Yeah, 650 to 680. Not in 655 or something, right? So let's say how much is the distance? 15 points is distance, right? If 15 points is the distance, then 22 point is my first target, will be met somewhere here. I will book 50% of my quantity at this point. Okay. And once I have booked 50% of my quantity at this level, what will I do? I will take my stop loss, which is at 650 or 55 somewhere. I will take my stop loss and I will shift it to my cost to cost, my buying level. So that even if after booking the first profit, 50% quantity profit, if the market says no, this is the optimal level I can reach, and now I'm going down, even if that happens, I will book the rest of my quantity at my cost to cost. It means there will be no loss on that quantity. So on half of the quantity, I have made 50%, like 1 is to 1.5. And on half of the quantity, I'm making no loss, just some brokerages and all. That means overall trade was successful. But if it continues this rally, I will keep on making profit. I'll just keep on taking the stop loss higher and higher and higher. How can you do that? How can you do that? There are a few ways. I'm going to teach you how to do that in this session only and in the upcoming session as well. But as of now, just understand this. Look at this. This is our alert candle. Tell me, will I take a trade over here or not? Everybody, tell me in the chat box, will I take a trade on this candle or not? Tell me, where will I take the trade or should I take the trade or not? Now, you guys are very active in giving the thumbs up, but now you're not saying anything. No reply. My God. All right. The answer is I will avoid this particular trade. Why? Let's see the condition. RSI, monthly RSI above 60. Done. Weekly RSI should be above 60. Done. Daily RSI should be crossing 60. Done. Volume of the alert candle should be higher than 20 moving averages. Yes. This is the problem. The volume of the alert candle is not above this blue line, 20 moving average. That is why I am not getting the volume confirmation. It is not fitting into my rules. I am not buying this at this point, at least. At least at this point, I am not buying this. When will I buy? I'll see. Okay, this is fine. Even though it worked, you can see it worked really, really well, right? It went up with a great speed, right? But I will not buy. Where will I buy? I will buy somewhere here because it is going down and taking support, and the support candle has good volume. That means I can buy at this level, and the market will give me good returns. And even if I buy, even let's say I'm ignoring the volume part and I'm buying, I will buy with a very small quantity. Why? Because volume increases my confidence in the trade. And what do I mean by the confidence? Confidence simply means my position size. If I have good confidence in the trade, I will buy with a bigger I'll buy the bigger quantity. If I have less confidence in the trade, I'll buy with this. I'll go with a smaller quantity. Look at this. Breakout, buy above the high, stop loss below the low, 1 is to 1.5 a target, we get somewhere here, then we can trail our trade. RSI above 60, RSI above 60, this is the crossover. Breakout, volume of the alert candle is high, RSI above 60, buy above the high, daily, weekly is above 60, monthly is above 60, you buy above the high and the market starts going up. Look at this, multiple chances to enter. Weekly above 60, monthly above 60. Okay. Now, where to enter? At this level, above the high of this candle. Below the low is the stop loss. The next candle went above, and the volume is also about 20 moving. That's great. I will buy. The market went about 20. This candle you bought, and the market went down. Fine. Your stop loss is not triggered yet. This is your stop loss not triggered, and then it starts going up. And if you missed this rally, you can also get a 60 support trade. Then it goes higher. You get another 60 support. Higher. You get another imperfect 60 support. And then even more. Breakout. Stop loss. 1 is to 1.5. And just keep on trailing. Crossover. Above 60. Above 60. Crossover. Buy above the high. Stop loss below the low. 1 is to 1.5 somewhere here. and then the bigger targets as well. Breakout below the low, 1 is to 1.5 somewhere here. And because it's a momentum trade, why? It's a momentum trade. That means the market is moving up with a great speed. So look at this, like a very straight up move. The more you see, the more you like it. Above the high, below the low, 50% somewhere here, and then goes even higher. And also 60 support trade is also possible over here, and then it goes even more. So the low of the support candle will be the stop loss, and you buy above the high of this. 1 is to 1.5. Look at this, achieved here, then another target, then another target. Look at this, multiple chances to enter. 60 supported this, went up. 60 supported this, went up. 60 supported this. This is the doji type, okay? Red candle, you were supposed to buy above the high of this. Next day there was a doji. That means it is taking some support. So you buy above the high of the doji, and then the market starts going. Right? All the concepts will give you some or the other examples in the market. So, is the concept clear or not? Is the concept of entry, stop loss, targets? There are a few things which are still left in the targets and trailing stop loss and all. Of course, we're going to cover that. But is the concept clear or not? KS, Pusatuo, Ganesh, what about you guys? Clear? Okay, perfect. KS, what about you? Pusatuo, what about you? Okay, fine. Now, I will give you some pro tips. Now, I'll tell you one thing. You have not paid any amount for the strategy that I'm teaching. You have paid the amount for the pro tips that I'm giving. Okay, you might have paid some amount to join this program. I don't know what amount is that. These Ediglo people, they never reveal that to me. Uh, but you don't pay for the strategy because, if you go to YouTube, you will find thousands of strategies. Okay, even my strategies that I teach in my premium programs, that is also available somewhere on Telegram for free. Somewhere somebody else is teaching the same strategies with their own name. Okay, so many things are there, but the money that I'm charging is for these pro tips, these nuggets and nuances. Okay, KS has some question. Do we keep the stop loss at 1.5 after the first 1.5? What does that mean?
Like in the sense you told we'll keep the stop loss at 1.5 times of the first amount, right?
No, no, no,
So
no, no,
that,
no, no. You are keeping your target as 1.5 of the stop loss. That means, let's say this candle is
oh, okay. Yeah, got it.
the high of the candle is 100 rupees.
Yeah,
Okay. And the low
understood.
of the candle is 95. Okay. Or let's say like 96. So what is your stop loss? It's a 4 point.
Mm-hmm.
Okay.
Yeah, yep.
And if you multiply 4 by 1.5, what does it make? 6. So your
6.
first target will be 106.
Okay. So
And
like,
once you reach
so after,
106, you
okay.
will book 50% of your quantity.
Mm-hmm.
Okay, let's say you bought 100, let's say 1,000 stocks. So you will book 500 over here, and you will take this stop loss from 96 to 100. So now, even if the market starts going down from 106, you will book rest of 500 of your quantity at 100 rupees only.
All
That's how
right,
it is.
all right, all right. Yeah.
Okay. All right. That is for the entry and stop loss and theoretical part. Now let's understand the pro tips. What are the pro tips? Remember, there is one more tool which is here. What is this tool? This is 200 exponential moving average. What is this 200 exponential? This is a moving average, and it is not just a moving average. You might have seen this yellow line in all the charts, all my charts. This yellow line is nothing but 200 exponential moving average. Now, this 200 exponential moving average is called the mother of all moving averages. Mother of all moving averages. It doesn't matter how strong a bull run or bear run is, doesn't matter. This support will always, most 90% of the time, it will be respected. And when I say 90%, it is a very big percent in stock. Very big percent in stock. Respected means if the bears are strong, doesn't mean it will stop at this level and go up. No, that doesn't mean respect. If you have seen the recordings, you will realize respect means they will come down, they will consolidate for some time, then go down even more. But this respect is important. Okay, so what is the pro tip? The pro tip is never ever take a trade if 200 EMA is in your way. Okay, what do I mean by that? I'll explain. I have an example for that as well. I guess, yes, I have. Oh, it's not here. Okay, fine. I'll search something. Don't worry. Okay, let's consider this one. Let's consider this one. Okay. Look at this. Can you see RSI going up, and this is also going about 200 EMA? But let's assume that RSI is going up because of this green candle. You buy above the high, you sell below the low. Like, you don't sell below the low, you take your stop loss below the low. Let's assume that RSI is going above because of this green candle. But you will see that 200 EMA is just above you. In that case, avoid the trade completely because this is a very strong resistance. Now, if you see over here, what happened, even though the momentum was strong, the market did 2 days time pass, right? Time pass for 2 days, and then it gave a breakup. So avoid the trade at any cost if the 200 EMA is very near to you on the upside. Okay. Second thing is, if the 200, let's say you have taken the trade on above the high of this candle and 200 EMA is somewhere here, then you can choose 200 EMA to be your target. Why? Because you will not just get your 1 is to 1.5 somewhere here, but market will also go to its next resistance, which can be 200 EMA. So you can book your entire profit at 200 EMA. So it can also act as your target. I don't know if I have an example of that. Look at this exact support on 200 EMA, market going up. I had a few examples. I don't know where they are because there's some change in laptop and they changed some slides as well. But yeah, but you got the crux of it. Second pro tip. Second pro tip is this strategy, this particular strategy is a profitable strategy, very profitable strategy. But this strategy is going to give you so many trades every single day. Okay, every single day. But because of the limitation of the capital, you cannot take every trade. So which trades to take? You will only take those trades which are also confirming your price levels. Remember, price, pattern, volume, momentum, volatility, time, sentiment, and trend. So we are considering this a momentum based strategy. So momentum is the entire crux of the strategy. We are considering volume as well. 20 मूविंग एवरेज से ज्यादा वॉल्यूम होनी चाहिए, the volume should be strong. ठीक है, we have considered volume, we have considered momentum. We are also considering patterns in some way. We are looking at dojis and all that stuff for support and all that. Perfect. You have to consider the price levels as well. You have to consider the supports and resistances as well. What do I mean by that? What do I mean by that? Understand this thing. Simple example is, look at this. Can you see this range in the market? Can you see a consolidation going on in the market? Okay. And why do you think this trade worked so well? Why do you think this trade worked so well? Because it was not just a RSI breakout, it was a range breakout. The market was in this range, sort of a flag pattern forming over here. Market gave a breakout of the flag. RSI went above 60. Volume was also above 20 moving average, which was great. So price was confirmed, resistance was broken, pattern was confirmed, flag is giving breakout, volume is good, momentum is great. You are getting multiple confirmations. That's why the market went straight. So if you get like 15 trades, see which one is confirming you with different say. I'll show you an example. Look at this. Let's say the market was going up and market went down. And then the market is consolidating. So which has done what? Which has taken RSI between 60 40, because market is consolidating, market is sideways, RSI is between 60 40. Okay, 60 40. Now the market is breaking this range. This entire range is broken by the market. RSI is also going above 60. What do you think can be your obvious target? Your obvious target can be next resistance, which is, of course, it will be 1 is to 1.5 over here. But the biggest target that you can aim is your next resistance. Perfect. That's great. You will take the trade, you will make good money. Why? Because you're using common sense, you're using the system, you're using the setup, you are using all the rules, okay? And you're also using the simple support and resistances. So you can book your targets, you can book your risk reward, everything. But let's say market went like this as well someday. This is also a previous peak. And this previous peak is before your 1 is to 1.5 target. That means if in case market makes a resistance of the previous peak, which is this one, and comes down, you will not even get a chance to make 1 is to 1.5. In that case, this trade is not in your risk reward ratio. You will avoid this trade. If you're not getting 1 is to 1.5, clearly you don't have any resistance before that. If you're not getting your 1 is to 1.5 directly, then you will not take the trade. This is another pro tip. And these support and resistances can also be, you know, useful for booking your targets. I will show you. I will show you. Let's say, let's say I'm taking the support trade. What can be this high? This high can be a resistance. Okay. This is my entry point. This is my stop loss. If this high is not 1 is to 1.5 of my stop loss, because it did not act as resistance, that's a different story. But it can, right? It can. So if it is not confirming with my 1 is to 1.5 ratio, I will avoid this trade. I'll show some more examples as well. Look at this. Now, can you see this consolidation? This is going on. And then the breakout with good volumes, RSI crossover, straight up trend. Why? Because we were confirming all the price and patterns. How do I know it's a consolidation? Because you see on the monthly chart as well, over here, there was some like this. On the weekly candles like this. That means for a few weeks, the market was zigzag only. So these bigger pitches also help you there. See, consolidation, then breakout. That's why. Look at this. Market was consolidating for a long time. Consolidation for a very long time. Then it gave a breakout with good volume, with RSI 60 crossover, with everything intact. That's why it went straight up. So you have to. Look at this very, very good example. This is a previous high, correct? This candle is giving me signal of RSI crossover. I will not take a trade on this candle. Why? Because इसके ऊपर ही resistance है. क्या होगा अगर टूट गया तो? नहीं टूटा तो it will come down straightforward. This is like अपने पैर पे खुद कुल्हाड़ी मारना. When will I trade? I will avoid this breakout trade. Okay, breakout हो गया, then I will look for chances to buy. So यहाँ पर I got the chance when the market came down at 60 support level. Then I took a confirmed trade. That was a good trade for me. It was a relieved trade for me. यहां पे ट्रेड करता टेंशन में रहता, अरे रेजिस्टेंस ले लिया तो, अरे ऐसा हो गया तो, अरे नीचे गिर गया तो. मुझे नहीं चाहिए वो कॉम्प्लिकेशन. आई डोंट वांट दोस थिंग्स. लुक एट दिस रेजिस्टेंस ब्रेकआउट यहां पे कहीं पे हो रहा है. Okay, so here is the breakout, here is the stop loss. I am getting 1:1.5 in this resistance. I will take the trade, I will book some of my profit here. And if you see, अगर आप ध्यान से देखेंगे, you will see market has respected this level. You see एक inverted hammer form हुआ यहाँ पर, then red candles also. अब bulls were strong, so it went up. That's a different story. But if I would have booked 50% quantity over here, I would be very, very relieved. That's why I took the trade. Getting a clear picture, everyone? समझ में आ रहा है? What are these which YouTubers can't show you? Only if you have some experience in trading, you can tell. Are you understanding this? Are you liking this thing, everyone? Yes, Sarah, KS, Posatuo, Ganesh. All right, perfect. Another thing that you can do with the same strategy is, as some of you asked me, who asked me, I don't remember. Ganesh asked me. Ganesh asked me, can we do 40 as support as well? Okay, let's talk about that. Yes, you can. Yes, you can. Only if your weekly and monthly is above 60. Now, when will it happen? If the market is going down structurally, let's like this. If the market is going down, your weekly and monthly will also be below 60 at the time. So mostly will not get such trades. But in case, let's say a small crash has happened in the market for a day, कोई bad news आ गई, so it went down straight. In those cases, weekly RSIs and monthly RSIs will not be impacted as much, but daily RSI will come down to 40, like this. Like this. Can you see? All the RSIs above 60. Here RSI above 60, monthly RSI is also above 60. But the daily, because of some sudden crash, sudden news, the market has come down. Because of that, the RSI has come at 60 level. Yeah, sorry, 40 level. In those cases, if the RSI of weekly and monthly is above 60 and daily is on 40 support, you can take those trades as well. And it will be a great trade because it will be a very, very small stop loss. I have one more example. Look at this. It came down suddenly because of some news or maybe such a big candle, right? So you took a support, it was taking support over here. So you bought about the high of this doji, okay? And the market went up. Those kind of trades can also be taken. So this was your strategy number 1, 2, and 3 in a way, because one was RSI breakout, second was RSI 60-40 support in two strategies. Now we have one more strategy left for today's session. But before that, I would like you to take a 2 minutes of break. Okay, 2 minutes of break, just 2 minutes. Don't go anywhere. Just consolidate what you have learned so far. See if you have missed anything in the notes. I'll be back in 2 minutes. Don't go anywhere. Okay, don't go anywhere. I'll be back in 2 minutes, and then we'll start with strategy number 2. Okay. All right, let's start again. Are you guys here? Back? Everyone? Alive? Sarah is here. Okay. KS, Pusato, Pusatuo, and Ganesh. What about you? Are you guys back? Firstly, any questions with this strategy? Here. Okay, perfect. Any questions with this strategy? Understood. Okay. In case you have any, don't write so much. Just unmute yourself and you can ask me directly. Okay. If you have any questions, just raise your hand. I'll ask you to unmute and you can ask me directly. Okay. You don't have any questions? Let's move ahead with another strategy for today, and that is our Bollinger Band setup, BB setup or Bollinger Band setup. Note it down. Bollinger Band setup. Okay. Prerequisite knowledge, basics of candlesticks and price action. You should know that. And then you should know multiple time frame analysis. Now, if you have watched the recordings, you will have a good knowledge of basics of candlesticks and price action. If you have paid attention to in the last strategy, you know multiple time frame analysis as well. Correct? So we both are like, I'm assuming that we are good with both these things. Next is required tools. What are the tools that we are going to require for this particular strategy? First tool that we are going to require is moving average. Second tool that we are going to require is Bollinger Band. Okay, Bollinger or Bollinger, whatever. Next thing. Now, in case because you haven't watched the recording, I'm going to mention it again and again and again. You haven't, because you haven't watched the recording, I'll show you a little bit about what Bollinger Bands are. So this is how much we practiced yesterday, like all the concepts of RSI range shifts, not a range shift, then I RSI divergences. Now, if you don't know divergences, how would you understand the next concept and all that? Uh, God, you guys are disappointing me today, okay? You guys disappointed me. But yeah, I think you got the recordings last night, right? Last night you got the recordings. There was a small delay from my side as well that you got the recordings last night. Um, but yeah, ठीक है ना? It was a crash course only, so you should be active. Anyways, so this is how a Bollinger Band looks like. Okay, this is a volatility band. This is also called standard deviation band. What are the meaning of all these things? I've covered that in the video recording. Please watch that. This is like a band which moves along with the price. Okay. Uh, it has three parts: upper band, middle band, and the lower band. Upper band, middle band, and the lower band. Price takes multiple supports and resistances on these levels. Upper level will be resistance, support on lower band. Upper level resistance, support on lower band. Mm, upper level resistance, support on lower band. So you can take trades like these as well. ऊपर रेजिस्टेंस के ऊपर सेल किया, नीचे सपोर्ट पे बाय किया, ऊपर रेजिस्टेंस के ऊपर सेल किया, नीचे सपोर्ट पे. Don't do that. That's a very raw use of Bollinger Band. We don't do that anymore. But yeah, that's how it can be done along with other confirmations. Okay. Now, in this particular strategy, we are going to use Bollinger Band as a reversal tool. What do I mean by reversal tool? We know what is reversal. Let's say the trend is going on. Okay. And if the trend is going to reverse, that is called reversal of the trend. If the uptrend is going on, if the downtrend starts, it's called reversal of the uptrend. We know there are so many Western patterns, or I'm assuming you know that there are so many Western patterns, which are reversal patterns like M pattern, this is reversal of trend, W pattern, reversal of downtrend, triple top, triple bottom, reversals. Okay. Then there is something called as head and shoulder. Okay, reversal of uptrend. Then there's something called as inverse head and shoulder, which looks something like this. Reversal of the downtrend. All these are reversal patterns. Now, this is like a pattern confirmation of reversal. Okay. But the thing is, if you go to stock market, there are more than 4,000 stocks. Out of them, 500 are liquid. Out of those 500, at least there will be 50 stocks every week or more than that. That will make a double top pattern or a triple top pattern, showing you that reversal is about to come. Do you have the capacity and the money required, resources required to trade all those 50 stocks and manage them? Not just money, but do you have the resources to manage those trades? No, you don't. That's why, like I'm just saying, you might be having it. I don't have. So what to do? Out of those 50 stocks, you have to filter out the best double tops or triple tops or double bottoms or triple bottoms to trade. Okay. So out of those 50, the best one, which are confirming with all other things, all the things, all the criteria that you have, those will be maybe 4 or 5. And you trade those 4 or 5 high probability trades. When I say high probability, that doesn't mean that they cannot prove you wrong. They can prove you wrong. But the probability of them being successful is much, much higher than the other 50. Okay. Now, that's another thing. Now let's talk about the strategy, and then I'll show you how Bollinger Band can be used. In this strategy particularly, we are not going to use the 3 screens. Okay, we're not going to use those three screens together. We'll be using only two. Only two. The first one will be a weekly chart, and second one will be a daily chart. First one will be to see the overall structure of the market, and second one, the smaller one, will be for the execution. Okay. What are the rules to buy? On one chart, which is the weekly chart, which is going to be on the side. On the weekly chart, you will plot 20 simple moving average, 20 SMA, simple moving average, 20 simple moving average. On the daily chart, you will plot Bollinger Bands. Okay, so plot 20 simple moving average on the weekly chart and Bollinger Band on the daily chart. Add the stock to watch list whose price is near 20 simple moving average on the weekly chart. So let's say this is your 20 moving average. What is a moving average? It's a line which is moving along with your price. So you have to add those stocks into your watch list which have like retrace a little bit and come near 20 moving average on the weekly chart, because that's the only chart where 20 moving average is plotted. It's too cold, man. Okay. Okay. So out of those 5,000 stocks, all those stocks which have come near the 20 moving average on their weekly chart, you will shortlist those stocks. You will add them to the watch list. When the price is on 20 simple moving average on the weekly chart, it will be on the lower band of the Bollinger Band on daily chart. Most of the time it will happen that if the price is on 20 simple moving average on the weekly. That means it has been going down since so many weeks, right? That's why it's on the weekly chart of, it's on the weekly 20 moving average. If that is the case, that means the market has been going down since many days. And if the market has been going down since many days, it will definitely be on the lower band of the Bollinger Band. So it will be on the lower band of the Bollinger because it has been going down since many days. Right? Buy when the price action confirms the bottom formation. Whenever the price action confirms the bottom formation on the daily chart, you will buy the stock. Some common formation at the bottom are if the market is making double bottom, if the market is making a doji, if the market is consolidating and then giving a breakout, if there is a hammer or piercing pattern or engulfing pattern, some patterns like these. I'll show you the example. Look at this. Where is the black? Here. This is a weekly chart. This is a daily chart. Okay. Whenever the market comes near 20 moving, this black line is a 20 moving average. Simple 20 moving average, SMA. And these are the upper band, middle band, and lower band. Okay. The strategy says whenever a stock comes near 20 moving average on the weekly chart, and that means on the weekly, on the end of the week, that means on Friday, if any stock is near 20 moving average. When can you do that? You can do when you can do the analysis. You can do the analysis only on the weekends. So you do the analysis on the weekends and you trade for the entire week. ऐसे आप करते हैं. That's why swing trading is best, especially for those who are working professionals and students, that they can do the entire analysis on the weekends, and on the weekdays it is just the execution part that you have to do. You just have to place your orders and that's it. आपने order डाला, buy order, stop loss order डाला, that's all you have to see. Then we will see what happens or what will not happen. But your hard work, your homework, your analysis will be done on the weekends. Your execution will be done on the weekdays. So on this day, we got to know, okay, this price has come near 20 moving average. That's great. When the prices come to 20 moving average, what I saw is since so many days, the market was red. That's why there's a big red candle, weekly candle, because this weekly candle is nothing but the add sum of 1, 2, 3, 4, 5, this daily candles. So on the daily chart, the market has come to the lower band. Okay, lower band ke upar aa gaya. Now you are waiting for confirmation of the trade. Okay, you want to know whether it will take support or not. So for that, you are not going to wait for the entire week ki bhai support lega, then agle hafte mein it will cross the high. No, you don't have that much of time. You will go to a lower time frame, which is daily chart, and you will look for confirmation here only for a early entry and a smaller stop loss. So what do you see on the lower time frame on daily chart? You will see a double bottom formation, which is the reversal pattern. So the moment you get a breakout of the double bottom, you buy and the market goes straight up for the next few days. So this 20 moving average is the price line. This is a pattern, W pattern, price pattern. We'll talk about volumes and all, don't worry. This is the basic understanding of the strategy. It came near 20 moving average. It is not very near, but still you can consider that. It came to the lower band on the daily chart. Right? It made a doji, crossed the high and went straight up. Now imagine if you would have bought this at 800 or 790, it went all the way up to 950. You can calculate the returns in these few days. Almost 20% return in 20 days. It is phenomenal return. Your mutual funds give you 12% return in 1 year. And if you are making 20% in 20 days, that is phenomenal. Look at this. Came down to 20 moving average. Sorry, yeah, 20 moving average on the weekly. Came down to lower band on daily. Red candle, doji, green candle together makes what? Morning star. You buy above the high and the market starts going up. There's multiple supports. Support went up. Support went up. Support went up. Support went down, but chalo, theek hai. Then support again went up. So if you see from in 2020, 2019, this one stock TCS would have given you those swing trades for the next 6-7 months. 7 महीने तक सिर्फ एक स्टॉक को you can trade for swing trading. You don't need to know any other stock what they are doing. Until and unless it is not taking support on 20 moving average, you will not quit this stock. You can just keep on doing it again and again and again. At every dip you buy, every rise you sell. Buy on dip, sell on rise. That's the golden strategy. Right? So it came down, let's say on this dip, on this one, it came down on the lower band. Red candle, doji, green candle, you buy above the high of this. And for the next 5 days, the market gives you 8, 9, 10% returns. That's all you need. 20 moving average support, 20 moving average support, 20 moving average support. See, multiple times. When it was taking support over here, what happened? It came down, made a double bottom. Breakdown of the double bottom, you buy, and the market goes up. Support over here. When it came down on the lower band, there was a double bottom. Reversal pattern. On the breakout, you buy, and the market goes up. Support on the 20 moving average. Lower band. Now, this can be a bigger double bottom if you want to trade that. Support on the 20 moving average. Came down, right? Consolidation for a few days and then breakout. But if you don't have these concepts clear with you, what are these Eastern patterns? What are these Western patterns? Okay, how to trade on confirmation of these patterns, then it will be a problem. So that's why we have been, sending you the recordings. Support on 20 moving average on the weekly, on daily, lower band, tweezer bottom pattern, buy above the high, and the market goes up. Support on 20 moving average, lower band, red candle, inverted hammer, green candle. So together they can make up a morning star, and then the market starts going up. Support on the 20 moving average. The more you see, the more you like it. See, doji, red candle, doji, green candle, you buy above the high of the morning star, and the market goes up. So have you understood the strategy? कैसे चलती है strategy? I'll tell you the stop loss and everything, but is the strategy part clear? How the strategy works? KS and Ganesh replied. What about you, Sara? Okay, yes. Posatuo? Okay. Now, this is what we usually pitch to people. This is a very powerful strategy. But how to make it even more powerful? When exactly to enter? Uh, normally, normally, I do not take the trades based on doji, based on hammer and piercing patterns and engulfing patterns. This is something I'm clearly stating you. All those examples were, great to get you some clients, but I don't do that practically. What I prefer is double bottom, and what I prefer is consolidation and break. Why? Let me tell you why. I showed you this. Reversal patterns of double top. This slide was there, right? Can you see this is a double top? Neckline broken and down, right? Now, simple double top. Why have I plotted this Bollinger Band around it? The reason is Bollinger Bands are also called volatility band. Okay, volatility band. What do I mean by that? I explained that yesterday, but I'm going to do it again in brief, not in detail. There is something called as divergence in the market. Divergence means what? That your price is saying something else and your tools are saying something else. Inside Bollinger Band, the volatility is stable. Outside Bollinger Band, there is huge volatility. So if the price is outside Bollinger Band, it is said that price has huge volatility. Why price is very volatile right? Look at this crazy moves in the market outside Bollinger Bands. But inside it is taking support, resistance like this. Okay. So here's a double top. First top, second top. There is something called as volatility divergence. What is the meaning of that? That means when one top was made in the price was very volatile. It was outside the Bollinger Band. When another high was made by the price was inside Bollinger Band. It means the volatility is very high. The highs are almost the same, but volatility has reduced a lot. That means price is at the same level. It is making highs, but volatility has reduced. What does that mean? There is a divergence. And divergence means the trend is going to reverse. So if there is a double bottom, double top, one outside Bollinger Band, second inside Bollinger Band, I will be more than happy to trade on the breakdown of the neckline because there is a confirmation from the volatility side. Price, pattern, volume, momentum, and volatility. So this is my volatility confirmation of reversal. I will show you example. First top outside, second top inside, neckline broken, market down. Look at this. Pay attention. I'm going a little fast. Pay attention. First bottom outside, second bottom inside, neckline broken, market reversed. First top outside, second top inside, neckline broken, market reversed. First bottom outside, second bottom inside outside volatility, neckline broken, market reversed. First top outside, second top inside, neckline broken, market reversed. First top outside, second top inside. This is the entire consolidation, right? Consolidation, breakdown. That means the market is at the same level, but volatility has reduced a lot. Breakdown and market goes down. First bottom outside, second bottom inside, neckline broken and the market goes up. First top outside, second top inside, third top inside, neckline broken and market goes down. First top outside, second top inside, third top inside, triple top, market goes down. volatility divergence. First top outside, second top inside, third top inside, volatility divergence, market goes straight down. This is how powerful. First top outside, second top inside, third top inside, fourth top inside, consolidation, and the volatility is reducing, market goes straight down. Volatility is high when it was at this level. At the same level, volatility has reduced. That means there's a divergence and market went down. So we are taking confirmation on from the volatility when it comes to double bottom. So if I show you examples, the trade that I personally took was this one. Why? Because when it came down, it made double bottom. First bottom outside, second bottom inside, neckline broken, and market went up steeply. I would avoid this trade. This can be taken first bottom, second bottom, third bottom. These are three different bottoms. If you make it a line chart, you will understand. And the breakout of this line will be a uptrend. I would have taken this trade for sure. First bottom outside, second bottom inside, neckline broken, and the market starts going. Look at this. All the double bottoms are working fantastically. Fantastically. Look at this. Double bottom, first bottom outside, here, second bottom inside, volatility divergence as well. Support, price, W, pattern, volume of the breakout should be good, of this green candle should be good. So volume, price, pattern, volume, volatility, chart हमने देख ली, goes up. Crazy moves. Look at this. First bottom outside, second bottom inside, neckline broken, market goes straight. Consolidation. First bottom outside, then consolidations, breakout, and market goes straight. I will not take this trade personally. I cannot take this trade, can also be missed. You are thinking itne sare trade miss ho jayenge, see great opportunities like these. How can we miss that? No. What I'm saying is, on the basis of the rules that I've taught you, I will not take these trades. There will be some multiple confirmations other than these, because I have some experience in the market. I look at other criteria as well, and then I can take a trade. What are those criteria? We'll be discussing that in tomorrow's session. But based on what strategy I'm teaching you right now, I will not take the trade purely on that. Okay, price, pattern, volume, and volatility is confirmed. Let's talk about the momentum one. When I talk about double bottom, there is also called as something called as momentum divergence. We talked about RSI, right? So in RSI, there is something called as divergence. That your price is going up, RSI is going down. That means there is a price is going up, price making higher highs. RSI is making lower highs. That means what? Momentum is going down. Price is going up, momentum is going down. There is a divergence. Market will reverse. Price is going down, lower lows, but RSI is going up. That means there's a difference in the direction. Market will reverse. It will go up. I will show example. Price going up, RSI flat, not going up anymore. Market went down. Price at the same level, RSI going up, that means market. How to identify this? How to plot these things? You will see in the recorded session. So please watch that. I cannot emphasize that more. Watch the recordings. Watch the recordings. Okay. Look at this. Price made higher highs. RSI made lower highs. The result is in front of you. Price made higher highs. RSI made lower highs. Result is in front of you. Similar highs, lower highs, result. Higher highs, similar highs, result. Lower highs, higher highs, result. Right? So when I'm looking at consolidations, And when I'm looking at double bottoms, if I plot RSI here, there is a double bottom pattern forming like this and this. In RSI, if I see a divergence like this, it is making a higher high. That means that would be a great signal from price, pattern, volume, momentum, volatility. I will definitely take a trade and it will go straight up. Sometimes this will also happen when the market is on 20 moving average and this dip has occurred. RSI will be on 40 support. All other RSI will be above 60. RSI will be on 40 support. Daily RSI will be on 40 support. That's great. This strategy is matching this stock is matching in my two strategies. I will buy. Sometimes this will also happen. $60.40. First bottom, second bottom. Okay. Similar lows. RSI was below 40 when the first bottom was made. And then RSI took a support on 40, which is called range shift. You will learn that in detail in the recording. So watch that video. Range shift, which is even stronger bullish sign. It is not just a divergence, but also a range shift. I will buy a huge quantity over here and the market will go. Price, pattern, volume, momentum, volatility. 5 list checked, market goes up. Right? So that is how you take multiple confirmations in one single trade. Are you getting it, everyone? Sara, KS, Osatwo, Ganesh. What about you guys? Yes, okay. Okay. Okay, Sara also got it. Ganesh also got it. Okay. So ultimately it all bottoms down to you guys watching the recordings so that everything will be very, very clear to you guys. But yeah, that's how it is. Now let me tell you about the targets and stop loss of this thing. Your targets will be decided by 1 is to not 1.5. In this case, it will be 1 is to 2. That means if your stop loss is 10 points, your first target will be 20 points. What will be your stop loss? Your stop loss will be swing low. So this will be your stop loss. Let's say you enter at the breakout of this candle, double bottom neckline, then your stop loss will be the swing low. So you have to see price action wise as well that, okay, if this is the resistance for me, okay, and this is my size of my stop loss, is this at least 1 is to 2 for me or no? It is, then great. It is more than 1 is to 2, that's great. I will book 50% of my quantity at 1 is to 2, and I will book rest of my quantity, maybe 25% more at the resistance, and then I will keep trailing my stop loss higher and higher and higher. So trailing stop loss is going to be the same for all the concepts. Once you book your 50% quantity, you will take your stop loss to cost. So even if the price goes down from this level, you will not lose any money. Right, I'll show you some examples. Double bottom, the swing low will be your stop loss. You buy above the neckline, break out of the neckline breaks out, you buy. This is the amount of your stop loss. Your target should be at least 1 to 2. So 1 and 2. Is there any resistance before that? No, the resistance is somewhere here. At here. So it's not in the range, it's not in our range. I will be comfortable to take this trade and I will get the target 1:2. I will book 50% of my quantity here, and then I'll just keep on trailing stocks. But if the resistance is somewhere here and it is not giving me 1:1, 1:2 risk reward ratio, I will not take the trade. I will avoid the trade. You should get at least 1:2. Look at this is the risk. That's your first, and that's your second. That's your resistance at this level. It is easily achievable. You achieved your first target, 50% booked, and then keep on trailing. So simple price action concepts can be used to trail your stop loss, to book your profits, to have better targets, and to decide whether you have to take the trade or not. Is this thing clear to each and every one of you? Any doubts so far?